Hello everyone, and welcome to this presentation of the correct way to trade support and resistance. Welcome, my name is Primo. I am the president and founder of Specialist Trading, an educational company, because all we focus on is educating our students and our members all the tips, techniques, and strategies that I've accumulated in my trading career. Now today I'm going to be talking about a very popular way to trade. I'm sure many of you are probably implementing support and resistance within your trading right now. And I'm going to show you what I feel is the correct way to trade it and will actually increase your odds for consistency if you apply this simple technique with your support and resistance trading. Once again, Specialist Trading is an educational firm. All we do is try to empower you with the information I've accumulated in my trading career so that you ultimately can make your own trading decisions. This is the purpose and the sole motivation behind Specialist Trading, not to force feed you signals, not to force feed you the perfect method to trade only one market, only one time frame for all traders, but for the purpose of giving you the information so that you can ultimately make your own trading decisions. I've been trading for nearly 40 years. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those I was a specialist. That's where we get the name Specialist Trading. Specialist doesn't mean they were any better or specialized in any way of trading more than anyone else. A specialist was just a person who made markets in roughly stocks. So if you wanted to purchase or buy or sell a particular equity or an issue, you had to go to the trader who specialized in that. And that's what I did. I made markets in roughly 50 stocks. I traded through the crash of 1987, the bull market that followed, and I left the floor in the mid to late 90s to pursue trading, to manage money, and also to teach. So I've been around every market environment imaginable. I've been through straight crashes. I traded through the crash of 1987. I've been through straight up markets. I've traded systems, techniques, strategies. I know what works in terms of consistency, and I know what doesn't. So this is what I do at Specialist Trading. I teach and mentor all of my students the techniques that have shown consistency in the past 40 years, and these are actually techniques that I currently use in my own personal trading. So get out your pencils and paper. We are going to have a great presentation for you today, but before we begin, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique with support and resistance, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you are taking a moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. You can copy down our handle right there. It's abbreviation for Specialist Trading. It's at SPCLSTTRADG. I post information on a daily basis. In fact, this morning, prior to the opening, I posted that we had generated one of our most popular signals for trading the markets, the indices, and the E-mini futures. And I posted that we had a signal having us going short yesterday in the E-mini futures. So as you can see what the market did, we had a very nice day with that particular setup that our strategy generated. So I post a lot of great free information on Twitter, although it is rather limited because of the way Twitter is set up. So if you would like to get more detailed information about what we do or about myself, well, my sister site, which is Pro Trader Strategies, they market and promote all of my courses. They have put together a Facebook page for us. So simply go to Facebook, log on with protraderstrategies.com, and there's a lot more detailed information about ourselves, what we do, a lot more videos you can watch, educational videos to learn from. Okay? So that's how to find out more about what we do and get some free information. Now, as I stated in the very beginning, we are an educational company. As you see here, my goal is not to force feed you signals. My goal is not to teach you what the perfect way to trade is. My goal is not to give you the strategy and tell you to take these signals each and every day. My goal is to teach you how to trade with a specialist edge. This is the same edge that was able to turn my trading around. When I first started out, I struggled tremendously for the first year or two. My mentors were lucky enough to see how much I was struggling. They turned my trading around, and everything they taught me is the same thing I teach to my students who are having difficulties. These same goals and these same aspirations were turned around by the techniques and methods that my mentors taught me roughly 40 years ago. And this is what I continue to teach today, and this is what I really owe a lot to, which has enabled me to trade for the last 39, nearly 40 years. So as you can see here, my goal is to teach you how to trade with the specialist edge, the same edge that turned my trading around. Now, here's what my mentors taught me. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. I mean, think of that. You can be trading for 30 years Or you can be trading for 30 minutes. It really doesn't matter, but anyone can pile on more and more and more things onto your trading plan. Either indicators, news events, different systems, strategies. It doesn't take a lot of character to overcomplicate your trading. But they also stated it's the most difficult thing in the world to simplify your trading. And the reason is because we've been taught for one reason or another that conventional wisdom is supposed to work. The more complicated your trading plan is, the more valid it will be, and the more likely you're going to be successful. Well, what my mentors taught me, and it was a difficult concept for me to grasp, but once I did, I started getting onto that road of consistency. But what they taught me is that the more you strip away these conventional ideas that are supposed to work but really don't, that's when you'll start to become consistent. So rather than having a complicated trading plan, I found out in my nearly 40 years of trading that it's the simplest of plans that actually hold the highest levels for consistency, as opposed to the most complicated ones. So try and strip away things that you really have found to have no consistency at all, and you'll get closer and closer to that, level of which you're trying to achieve. Okay. Now, before we begin, I just want to state that I know you may have questions in the presentation, but please hold off any questions till the end of the presentation. This won't be very long, and I promise we'll have question and answer portion at the very end. So if you happen to have questions, kindly hold off to the very end, and then we'll get to them at that point in time, okay? All right, so why don't we begin? Here's what you're going to learn today, since this is being conducted like a classroom. Okay, we're going to talk about conventional trading of support and resistance. We're going to go off how most of us have been taught with looking at conventional wisdom, how all the books and seminars teach us how to trade with support and resistance. But then I'm going to teach you what I feel is the true definition of support and resistance, what it's really based off of. And then once we really totally understand that, I'm going to show you the correct way to trade support and resistance, what I have found to hold a higher level of consistency. And then finally, we're going to kick it up a notch even more. We're going to show you how you can increase your odds using this one simple technique once you add to your support and resistance trading. Okay, so lots of things. Once again, if you have any questions, wait till the very end of the class today, probably in about 20-25 minutes, and then I'll open up the question and answer box and we'll go over any questions you may have. There's an question and answer box that I have to open up in order even just to see your questions, and I'm not going to open that up just until the very end. So I won't even notice that until the very end of today's class. So kindly hold off and then we'll get to those, okay? All right, so why don't we begin? And let's start off by explaining what the conventional trading of support and resistance actually is. This is the way most of us were taught, myself included. This is the way most of us trade and view support and resistance. Let's start out with a standard definition. Support and resistance is a concept in technical analysis that states the movement of the price of a security will tend to stop and reverse. Extremely important, that little phrase there. Will tend to stop and reverse at certain predetermined price levels. Okay, so if we look at an older chart of Apple here, and by the way, I'm going to start off showing you some very older charts just for educational purposes, but then I'll show you very recent charts that happened just a week or so ago. All right, so as we look at this chart in Apple right here, we see, well, we're kind of going sideways to a range, but we have some type of support right here because price has come down to this level not once, twice, but 3 times. So obviously there are buyers here supporting this level. They don't want it to go any lower. So this is where you should buy because remember, support and resistance is defined as coming to a certain price level and then stopping and reversing. So this is where you want to buy because most likely price will reverse as it does right here, right? Works like a charm. It'll also work looking at a different market, the futures. As we see here, price has been going higher in this older chart of the E-mini futures, and then we hit some type of a topping level. We can't seem to get through this area, so this is obviously resistance. There are sellers here. So as the definition says, at a predetermined level, price will tend to stop and reverse, as you see here. Now, this is all well and fine. In fact, it works perfectly on paper. Ultimately, though, when you get in the market, this is what usually happens. As we look at this older chart in TGT, we see here that it fits all the parameters, all the requirements. We've come down 1, 2, 3 times. Obviously, there are buyers here supporting this. So this meets the definition of support, and so we want to wait and hopefully take a shot here that we're going to buy, because price is going to tend to stop and reverse. So you step in and you buy, and look what happens. Does that look familiar to anyone? I know it does to me, because this is the way I used to trade. Every once in a while, I'd have one or two good trades that met the requirements perfectly and it would work like a charm. And then it's always the last one I would trade where it didn't work at all. And it would look just like this. And then I'd ultimately end up giving everything back. Now, it doesn't just have to be in stocks. We can look at this example here in the euro dollar, an older example. Once again, we have some type of support here. Obviously, there are buyers holding up the euro dollar, maybe due to some news event or economic conditions, worldly economic conditions, or maybe even some Fibonacci retracement or some Fibonacci support. It doesn't matter. There's reasons for why there is support there, because there's buyers there betting on that. So you want to go along with them. So you jump in and buy, because there is obvious support here, and look what happens. Once again, it doesn't hold. It can also happen on an intraday basis. As we look at this older chart of the IBM stock, this is an hourly chart. We've been going straight up, and then we meet some type of topping level here. It looks like a double top. We can't seem to get through this level. Obviously, there are buyers here, so you jump in to sell, because maybe we're going to be going all the way down. And you're looking for that stopping and reversing the way it worked before, but it doesn't work before. And as you can see, the entire way up, we are met by resistance, but we continue to go all the way through each and every time. So as you see, conventional wisdom tells us to trade support and resistance a certain way. Is there any consistency in that way of trading? Absolutely not. In my nearly 40 years of trading, I have found no consistency in trading support and resistance in its most conventional way. And I'm saying this from firsthand experience. I'm not trying to push it down and to say that you're looking at the wrong things. I'm saying this from personal experience, because this is the way I used to trade it. And I know a lot of traders say that no, you always have to look at support and resistance. And I know of some traders who are able to do very well trading standard and conventional way of support and resistance. But they're probably the 1% of all traders. The rest of us, myself included, have a very difficult time. The reason is that it works sometimes, but then the times it doesn't work, you give everything back. So, what is the true definition and application of support and resistance? Afterwards, the title of this presentation is titled The Correct Way to Trade Support and Resistance. Well, I'm going to give you what I feel is the true definition. From being on the floor, from being a specialist, a person who made markets and who had access to inside information in terms of where orders were in my book. After years and years of seeing this, I'm going to tell you exactly what support and resistance actually means. And I'm not trying to be condescending or arrogant, but in my opinion, support simply means that there are more buyers than sellers. At some point in time, there are more buyers at a certain level. Now, is it guaranteed, or is it assured that these buyers will stay at this level? Absolutely not. So if it is not in any way assured that these buyers will keep that support there, then why on earth should we try and base our buys based off of that? We have no idea how long they're going to be in there. Now, conversely, resistance simply means at some point in time at a particular price level, there are more sellers than buyers. Okay? But that's all it means. Does it mean that they're going to be in there, that support will always stay there, or that resistance will always stay there? Absolutely not. And the reason I came up with this definition is because as a market maker on the floor of the stock exchange, I used to see when brokers and institutions would give me orders. I traded Waste Management. I traded US Air. I traded Beverly. I traded Reynolds Metals. I was the assistant trader in IBM. So I knew when traders were giving me orders and when they were pulling those orders or canceling them. Many times, I would receive an order for hundreds of thousands of shares to sell, or even hundreds of thousands of shares to buy. That would create some type of support, because I also knew that those orders were being placed in other specialist books in New York, in Chicago, in Boston, in Philadelphia. That was creating the support. Okay? Now, was that guaranteed that order was going to stay in there? Absolutely not. Sometimes that order stayed in there a week, sometimes a couple of weeks. Sometimes it stayed in for maybe a matter of minutes, and then it was canceled. So why on earth would anyone place their bet based off of that? you have no idea or no inclination when that order or how long that order is going to be in there, because that's what creates support. Now, on the opposite side of the coin, sell orders would be placed in my book, and those are the things that created resistance. And many times I get orders, sometimes over 1 million shares to sell at a certain level. No trader in the world thought we'd ever get through that level. Well, we got right through that level the minute those orders were canceled. So there's no reason in the world, there's no qualified reason in the world to put an order in there based off of that. So what we want to do is simply sell support and buy resistance. What we want to do is exploit these so-called support and resistance levels. Once we trade through these support or resistance levels, that's when we're going to take our action. In other words, here's what support should be. Support is not very complicated. Remember, we want to keep things as simple as possible. Everyone thinks that support should look like hundreds of bars and we keep touching and touching and touching a level. No, support is really just a 3-bar pattern. And it looks like this. Bar number 1 makes a low. Bar number 2 makes a lower low. And bar number 3 makes a higher low. So you have this type of a V approach. That's your support right here. That's all it is. And so what we want to do is sell the minute price goes through that. Because what that means is if price is going through that, it most likely means that the order has been canceled or it's no longer there. The order that is creating the support. Now conversely, resistance looks like this. I know a lot of people have been taught, or you've looked at and said, well, Steve, I've always been taught that resistance is either a few weeks to a month. Maybe I need to look at volume because that tells me what the institutions are doing. That tells me what's going on in the world. Don't overcomplicate your trading. I used to look at the same things and guess what? It didn't make me an extra dime. It didn't help me at all. So resistance is just a 3-bar pattern. Now it's just the opposite of support. You have a high, the next bar creates a higher high, and the next bar creates a lower high. So you have this type of arrowhead approach. This is our resistance. What we're going to do is we are going to wait. Once price trades through that, that means the order has been pulled. It's been canceled. It's no longer there, and we're going to buy. So we're doing the very opposite. Okay? Now, once again, I know a lot of traders have trouble with this 3-bar concept that is telling you what support and resistance is. Well, let's look at this chart right here. This is a 60-minute chart. We looked at this earlier of IBM. Now, this is so-called resistance. Now, someone looking at it would say, well, Steve, this is what I'm more used to. I've always been taught you have to look at a number of bars, and this gives me a clearer idea of what resistance is, okay? This is an hourly chart. Let's go up one time frame to a daily bar. This IBM, once again, the same exact time frame, but we go up to a daily bar, guess what? We've created that 3-bar pattern. So know this, that all this means is when you look at this 3-bar pattern on a smaller time frame, that's where you have that complex kind of chart pattern where a bunch of bars are hitting. But why overcomplicate things and wait and sit through 10, 20, 30 bars when you can just look for 3? So if you're having trouble with that concept of looking at just 3 bars, just know that on a smaller time frame, you have that convoluted way of looking at the chart. In other words, we look at this euro dollar right here. Someone would say, Steve, this is what I'm used to. We have this, a number of bars here touching this support. Well, this is a daily bar of the euro dollar. Let's go up to a higher time frame. Let's go to the weekly bar. Guess what? 3-bar pattern. Low, followed by a lower low, followed by a higher low. The same exact time reference. Okay? We've just gone up to a higher time frame. So it doesn't matter what time frame you like to trade, just know that whenever you see that 3-bar pattern of support or resistance, if you're having trouble with it, just know that on a smaller time frame, it looks exactly like what you're looking for. It looks like that very complicated a number of bars trading there. So there's no reason to make your trading more complicated than it has to be. All we want to do is condense that, consolidate it into a 3-bar pattern. That's all we're doing. Okay? So let's look at some examples to give you a better idea of how, once again, to implement this particular technique. But please remember, any questions you may have may be answered on the next slide, so hold off on any questions that you may have. Here's the first example in WEC. As we can see here, we've been going up in WEC, and so all the time up, we had this little 3-bar pattern. See, high, 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 high. we have this kind of a little arrowhead approach. That was that was resistance. Every time we made these little tops, that was a seller coming in saying we're not going to go any higher. And every time we went through, most likely they canceled their order. So all you have to do is know that every time you see one of these, and if you break through, that's going to be your buy point. Now, what we tell most of our traders is to buy at the very beginning, and look at that's where you have the most bang for your buck. So you see how easy this is. If we had looked at this chart in WEC as looking to sell because we're getting to a certain prearranged price level, and we're going to sell every time it gets to resistance, well, would have lost a lot of money. This is the way I used to trade, and this is why I always had trouble with support and resistance. It works the same way with support. As we look at this older chart of SLV, that's the ETF for silver, okay? Every time here, it looks like someone would say, well, we had support right here. Well, we had support right here, support here, support here. What happened to that so-called support? It broke through every time. Did it mean that the support wasn't valid? Did it mean that all the institutions were wrong? No, all it means is that they canceled their order in the book. That's all they did. They canceled their order and decided to go to a different level. So don't base your trades off support and resistance, the old conventional way of trying to use that support to buy. Do the opposite. Find out where that so-called support is, one right here, 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 and then once we break below that, that's where you sell, because that means the support that originally created the stock to hold up there has been canceled. So now you just want to sell because there's no longer any buyers in the book. Now here's the only problem with this. Those were two great examples, and they work perfectly because they're ideal examples. But from time to time, you will see this, most likely in quiet or sideways markets or in the summer. Let's say we're looking at this older chart of Oracle right here. All right, we see here that we have three levels here that we created some type of resistance. So you buy each time you go through. So you're excited, you think the market's going to take off, and you plot where your support is. And guess what? It doesn't take off, and you break through the so-called support. So you figure, well, okay, I guess we're going lower. So you decide to sell. Now you're short. You've had a small minor loss here, but you're hoping that the market is supposed to go down. So you're short, and lo and behold, we go the opposite way again. Now we break through resistance. So you cover your short, a loss, and you go long. This time you're hoping you're going to go higher now because you've had two pretty big losses, and it gets to go higher, and you buy some more. Here's your support, but you don't think you're going to get down there, and then look what happens. News event happens, and you gap lower, so now your stop is executed, and you're short, once again, at the very low, and you've had nothing but losing trades because you're getting whipsawed, okay? I'm not trying to tell you that this is a perfect way to trade support and resistance. You will find scenarios like this every once in a while. So we have to ask ourselves, how do we increase our odds for trading with support and resistance? Here's what we're going to do. We're only going to buy resistance in an uptrend, and we're only going to sell support in a downtrend. So now we have to discern what the trend is. We can't just go in and blindly buy if that 3-bar pattern is violated to the upside. And we can't just go in and blindly sell if that 3-bar pattern is violated to the downside. We have to be sure that we are in sync with the trend. All right, so if we're going in an uptrend, we're looking for resistance, and that's when we're going to buy. We're not going to sell in an uptrend. And if we're in a downtrend, we're not going to be buying. We're only going to be selling support. The trouble is, how do we find out what the trend is? Because everyone and their sister has a different idea of what the trend is. Well, let me share with you just 3 standard generic ways for finding out the trend. These are trending tools, and they're very basic. They're very simple. You can use indicators anywhere from oscillators to moving averages to help you find out what the trend is, okay? A lot of traders like to use patterns. They like to find higher highs and lower highs to determine that you are in an uptrend. Or conversely, they'll say lower lows and lower highs. That tells you you're in a downtrend. And still, even more traders like to look at dual time frames. So they'll like to find out what the trend is for an hourly chart, and then they want to see that the 5-minute chart is in sync with the hourly chart. So lots of different ways. We're going to show you a very simple way, just using a simple indicator type of approach. What we want to do is just plot a 50-period moving average. And if price is above the 50-period moving average, we're in an overall uptrend. If price is below, we're in an overall downtrend. That's how simple it is. Remember, keep things as simple as possible. So let's look at this recent chart of HRL coming into the beginning of the year. Where is price in relation to this 50-period moving average? Price is above. So therefore, we are not going to be selling anything. The only thing we will be doing is looking to buy because we're in an uptrend. So therefore, if we're looking to buy, we want to identify all the so-called resistance points where it looked as if for sure the market was not going to go any higher. And there's a bunch of them. Okay, if we mark it off with these green horizontal lines, look at all these 3-bar patterns here, going all the way up. At each and every one of these points here, there were orders in the specialist book or online just by sellers saying we're not going to get any higher. And then once we went through, basically the orders were not there anymore. They moved them or else they canceled them. So we're just exploiting that. And we always tell our students the first signal usually has the most bang for your buck. So had you taken this down here roughly back in September, well, that would have given you 17 points coming into the beginning of the year. Okay? See how simple this is. We're not looking at any news. We don't care what the institutions are doing. We don't care what volume is doing. We're not looking at a ton of indicators. All we're doing is exploiting so-called conventional wisdom way of trading support and resistance. Now, if you had been using the so-called conventional wisdom and looking for resistance to go short, you would have lost a lot of money because the resistance didn't hold. Much better if you're in sync with the trend and exploiting so-called support and resistance. All right, that's trade to the upside. Let's look to the downside. Here's a chart of Apple coming into the second week of January this year. Now, originally we were above the 50-period moving average, but then in the middle of December we crossed below. So this means the overall trend is down. This also means we will not be a buyer if we have a confluence of bars below the 50-period moving average. So therefore, we're going to look for all the areas that were labeled so-called support. How about right here? I'm sure a number of people thought, well, we came down here and it looks like we're bouncing. So this is where I want to be buying because we're most likely going to stop and reverse according to the conventional definition. There's no such thing as that. Did it stop and reverse? Yeah, for maybe a week, and then look what happened. Wouldn't you much rather had just simply waited for it to break below the so-called support and then sold? Had you taken the very first setup, you would have had the most bang for your buck, and in just roughly about a month's time, it's 19 points in your direction. And we're not saying all our students held out and for the maximum amount of points, but we're just giving you, high probability, high consistency setups here. That's how you'll become consistent, not by listening to news, not by taking your cue from a chat room or from a trading room, but by learning these high probability setups that have stood the test of time, and then making your own decisions, not relying on an outside source to tell you what to do, but relying on your own intuition, on your own decision-making process. That's what will get you on that road to consistency. That's what we do at Specialist Trading. We provide you with education so that you can make your own decisions. How about PSA? Now, this is a much more expensive stock, a $300 stock. We realize not everyone purchases $300 stocks, but we show you this just for the sole purpose of letting you know that you can also apply options to this type of technique. We have a number of students at Specialist Trading who use this technique with options. So you use the same method. You ask yourself where price is in relation to the 50-period moving average. Obviously, price has been above. And, someone looking here could say, well, Steve, yeah, it's easy to see in hindsight that price was above. Well, you could have seen back here in October that the majority price was above. So don't let anyone ever tell you that, yeah, well, looking back, it's easy. No, it's cut and dry. The entire way up into September up to October, we were above the 50 period. So that's telling you should not be shorting. Now look at all these places we stopped. That's where there were orders in the book that were sell orders. And none of them held. Sure, they would go down for a little bit, but then what happened when they were tested again? They went higher. So all you want to do is just find those areas where so-called resistance was. And once you trade through, that's where you want to be a buyer. Okay? Now, if you would have taken the very first setup back here in September, beginning of October, that's 40 points in your direction. As an option trader, that's a nice gain there for a couple of months. How about AKAM? As we see here, there was obviously some news or some event that caused the stock to gap down strongly to the downside. Okay? That's okay. A lot of people would say, hey, look we gapped down, we closed higher, It looks like we're holding here. There's obviously some support. There's some buyers, probably the institutions want to buy this, or maybe this is some Fibonacci support place, or maybe this is where the full moon is and we should be buying here. There's a number of reasons why you can justify it. What's the first thing we ask ourselves? Where is price in relation to the 50? Price is below. So are we going to be buying? Are we going to be betting on any type of support? Absolutely not. If price is below the 50, the odds are in our favor that price will continue to go lower. So we're not going to buy anything. We're not going to care what anyone says in a chat room or a trading room. We don't care. We're only going to be looking for sell setups. Look at all the places that were so-called support here, where we had the 3-bar pattern, and absolutely none of them held. Sure, we would come down and hold for maybe a couple of weeks, but look what happened. Ultimately, we'd come back to test that level, and there were no more buyers there. So look what happened. So all you have to do is mark where these areas are. Had you taken the very first setups right here in November, it's 15 points to the downside, okay? Coming into the second week of January. Now we can also use this in commodities. Here's crude oil. So many people, so many students have been calling me and saying, boy, Steve, crude oil keeps going lower and lower. This is really amazing. Not really. Where's price been? Well, for over a year, price has been actually below, most of the time, below its 50-period simple moving average. Okay, so there's no surprise that it's going lower. We would only think of purchasing crude oil once it's really above its 50-period moving average. So now that you see it's below, coming in once again to the second week and third week of January, you just want to be a seller. There's no reason to sit here and say, well, gosh, I thought it was going to hold right here. Look how many times we had support right here and it didn't hold. And then I thought this double bottom here would be support and it didn't hold. There's no such thing as support. It doesn't exist because it's just orders that were in there originally and then they were canceled. So we're going to exploit that, and we could have just sold it. And look at all the nice trades we could have had to the downside if we had just simply gone with the flow as opposed to try and use an antiquated idea of support and resistance. Now we can also apply this to a different market. Let's look at the E-mini futures, and let's look at an older chart of a weekly chart going back to 2013. This is going back nearly 3 years, and on a weekly basis, coming into the beginning of, or I should say the end of 2015, where was price? Well, it was above the 50. So on a weekly time frame, you've known since 2013 not to be short the market, the E-mini S&P or the S&P 500. And look at all the chances you could have had to use this. Now, I know a lot of people wouldn't have used this technique because it's difficult to hold futures on a weekly time frame overnight. But you could have used this as a market timing tool to tell you when to go long the market. Now, if we go down to a smaller time frame, let's go back to just about a month ago. Now, the market fell out of bed the very beginning of 2016. Everyone was surprised. Everyone had a different reason. It was because of the high-speed computer programs. It was because of the hedge funds. It was because of China. Do we care about that stuff? Absolutely not. Why? Because it overcomplicates your trading. There's no reason to look at that. All we want to do is find out what the trend is. And on an hourly basis, the market was already telling us there's an enormous amount here of bars that are closing below the 50. So we should be short. Now, this is the first trading day of January. This was December 30th, okay? So if we knew we were below the 50-period moving average, all we had to do is use this simple technique of find so-called support, and you think you could have done well taking this very first setup here, all right? That would have generated, I'm not saying everyone would have stayed in this long, but that would have generated 220 points. All right, that's about $11,000 per contract in just about the first couple of weeks of trading. That's how simple trading is. The only reason it's complicated is because we overcomplicated ourselves. We've been taught that you've got to listen to the news. You've got to go to a bunch of trading rooms and chat rooms. You've got to watch TV and listen to what the guy's telling you. There's no reason to do that. I stopped listening to news over 30 years ago while I was on the floor. Okay? We don't have a chat room or a trading room at Specialist Trading because we believe it's counterproductive. You'll turn that into a crutch and it'll start going against the entire philosophy of what we teach, which is making your own decisions. Now let's go to a 5-minute chart. Okay, this was just a few weeks ago at the end of January. As we can see here on a 5-minute time frame, we use the same exact way of looking at the markets. For the first part of the day, we were below the 50 period. So that means we were only going to be looking to sell. So if we're using the same exact technique, if you could have taken the very first setup here, that's 30 points in your direction in the first 3 to 4 hours of the day. That's $1,500 per contract. Once again, not saying that all of our students got in at the exact point top here and exited the exact bottom. We're not saying that. We're just saying that's how much room you had to work with. Now, once price started to change and go higher towards the middle part of the day, well, now we're on the upside of the 50 period moving average. So now the overall trend is up. So we're no longer going to be shorting. Now we're looking to exploit resistance. All right, the so-called tops. And then there are only 2 setups here, but guess what? It would have given you 30 more points of room to work with to the upside, another $1,500 per contract. So I've shown you weekly bars. I've shown you 5-minute bars. I've shown you stocks, futures. Let's look at the Forex markets. Doesn't matter what market, what time frame. Here is a daily chart of the Canadian dollar coming into February here. Where is price in relation to the 50 period moving average? Price is above. So are we going to be selling? No, we're only going to be looking to buy because the overall trend is up. Okay? You can try this with any strategy you currently have. It doesn't have to be this technique. It can be one that you're using right now. But as we see here, since the I guess, let's see, going back all the way to November, actually, and even October, I believe we were above the 50 period. So all we have to do is apply this simple technique of look for so-called resistance and then simply jump on board. Had we purchased the very first one right here back in November, that's 1,250 pips to the upside in our direction, about $12,000 per contract. Just a matter of a month. Now that's a daily bar. We can go to a 4-hour chart of the British pound. The British pound has been going lower and lower. A lot of people are really dumbfounded as to how low the British pound keeps going. We don't care. We just ask ourselves, if it's below the 50 period moving average, we're going to be sellers. Once it has a number of bars above the 50 period, well, then we'll be buyers. That's all we cared about. We don't care about what the reason is. So on this 4-hour chart, we're below the 50 period. This is going back into the middle of December. So we just use the same technique. Had you entered to go short here once this first so-called support was broken, well, you would have ridden it all the way down here for 900 pips in your direction, $9,000 per contract. Once again, this is the way I used to trade. Not what you're seeing here, but standard conventional wisdom trading support and resistance. Okay? And trust me, I would have some good trades every once in a while, but it was always the 3rd or 4th trade where I'd wind up giving everything back. Why? Because in my 40 years of trading, I have found no consistency, absolutely none, in trading the standard conventional way of support and resistance. Now, once again, I'm sure there are some traders that do very well trading that way, but they're probably only the 1% of all traders. The rest of us, myself included, have a very difficult time trading that. I was lucky enough to come in contact with some mentors that were able to show me the reason why I was losing money is because I was overcomplicating my trading. I had tons of indicators on my screen. I was listening to every news event, money supply, jobless claims, interest rates, earnings reports, everything that came out. Plus, we didn't have trading rooms or chat rooms back then, but I subscribed to every newsletter there was by every trading guru. All of these things that were supposed to help me make money, going to all the seminars. There were no webinars either at that time. There was no internet, but we went to seminars, and nothing made me money. Nothing was working. So my mentor said, Steve, simplify your trading, get rid of all those things, and you'll start to see consistency. And I'm lucky enough to really have believed that concept, because that is what has been allowed me and enabled me to trade for nearly 40 years. So let's recap once again. The true definition and application of support and resistance is simply support means there's more buyers than sellers. At some point in time, an order came in either from an institution or from some large brokerage firm to buy at a certain level, okay? And that's what created the support. So at that time, there were more buyers than sellers. Were they required or guaranteed to stay there? No. Sometimes they were there for 5 days, sometimes they were there for 5 minutes, but ultimately they would pull their order and they would cancel it. Same thing with sellers. It just means that there's more resistance equals more sellers than buyers, because a large order came in to sell at a limit at a certain price. Okay? but there's no guarantee that those orders are going to stay there. So we just want to do the opposite. We want to sell support and buy resistance. Now let's recap. So we went over conventional trading of support resistance. We see how every once in a while it will work, but on balance there's really no consistency to that. And we just went over the true definition of support resistance. Now the correct way to trade is simply to exploit it. Since we know that those orders are not in any way guaranteed to stay in there, once resistance has been broken or traded through, we're going to be buying. Once support has been broken or traded through, we're going to be selling. It's that simple. Now, that will work, but the way to increase your odds is to do this in sync with the trend. So if you see a consistency in bars above the 50-period moving average, this means you're in an uptrend. Are you going to be selling in an uptrend? Absolutely not. So that means you will only be buying resistance in an uptrend. Conversely, if price is below the 50-period, it means you're in an overall downtrend. Do you want to buy in an overall downtrend? Think of the crude oil chart. It's been in a downtrend. Do you want to buy crude oil? No. Think how much money you could have made just simply going with the flow and selling crude oil. Okay? The way to do it is to apply this technique. You're going to simply sell support once it's been violated. Okay? All right, now ask yourself, as we close here and we go to question and answer, do you think this edge or any of these edges I've explained to you today could have helped your trading this past year? Okay, now remember, this is not a full-fledged strategy or system. I didn't give you places on where to exit the trade. I didn't tell you where to place your stop. I didn't teach you about money management. I just showed you a different approach to viewing support and resistance. But don't you think that could have helped you? If you go back and look at your own trades, what if you just looked at the simple 50-period moving average and used that to help you? Don't you think that could have helped? I can almost guarantee if you went back and looked at your last 10 or 20 trades, your losses would have been because you were out of sync with that 50-period simple moving average, meaning that you were buying below the 50-period moving average and selling above. That's most likely why you were having losing trades. All right. What if I could give you 3, 4, 5 more educational techniques? As you can see, we are all about educating you, giving you things like this that have stood the test of time. What if I can give you upwards of 5 more educational techniques that are just like the one I share with you today, but completely different in their content? Well, here's what we're offering you today, our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour video seminar. About 3 years ago, I was asked to be the head speaker at a seminar in Denver, Colorado. And I spoke for 3 hours in front of a lot of people. They paid good money to come see me speak. I was a featured speaker. And I spoke for 3 hours on many more high probability edges, just like the one I talked about today, but entirely different. I also gave probably away all the rules to one of our best pullback strategies. That's strategy number 1. So what we're doing, we're offering today is this 3-hour video seminar. It is an online course of when I spoke in Denver. It's high quality definition. It's a great video. You can watch it anytime you like. And let me show you some of the recent signals that were generated using the strategy that I teach in this 3-hour video seminar. All right. This is a pullback strategy, so it's entirely different from what I taught you today. What this does is it looks for the trend, but then it looks for sell-offs within the trend, as we see here at the beginning of January of last year. And then we see how we get to this point and then we bounce up, okay? Now, if we look here in NBL, we see how we had a number of bounces, and each time we bounced, the strategy generated a sell signal, okay? And as we can see, we bounced and then went lower. Had another bounce, another sell signal. Had another bounce, and then another sell signal. We can also use this on weekly charts. You can use this as a market timing tool. Every time the market fell down on a weekly time frame, strategy number 1 generated a buy going all the way up into 2015. And we can use it on a 5-minute chart because it absolutely does not matter. Here's a more current chart all the way here. Every time we had a bounce in the 5-minute time frame, the strategy generated a sell signal, and then we went much lower. Lastly, we can apply this to Forex markets because we're using the exact same rules. It does not matter. We do not have to change because of the market or the time frame. Everything stays the same, and every time we had a little sell-off here, rather than thinking we had topped out and we were rolling over, the strategy generated buy signals. So I'm offering many more high probability trading edges in this 3-hour video. I tell you which indicators to use, which ones not to use. I go over the difference between a system and a strategy. I talk about what I feel is the #1 chart pattern that you should have in any strategy or trading plan. And I think probably the most important thing about this is that I give you all the complete rules: entries, exit, stop placement, money management, okay, trading conservatively, trading aggressively to one of our most consistent and popular pullback strategies. It's strategy #1. Lastly, with all this comes my personal email address. You're a lifetime student of mine, so you have lifetime correspondent with me. This is not just something that lasts for a couple of weeks, then disintegrates. This is yours to keep for life, and you're a lifetime student of mine. You can converse with me anytime you'd like. Now, as I stated earlier, Pro Trader Strategies is my sister site. They market and promote all of my courses. They have this advertised on their website for upwards of $1,000. That's how popular, and that's how much information is jam-packed in this. But today, because of all the attendees listening today, we're dropping this down to $37. I really don't think you can get this much jam-packed information, plus all of the complete rules to a strategy for such an inexpensive price. But that $37 is only going to last for the next couple of days. Okay, it's not something that you say, well, I can call these guys back next week. It probably won't be there next week. We'll be back to $1,000. So if you really want to take advantage of this much information, if you like what I share with you today, and you'd like some totally different information, lots and lots more, 3 hours more, plus a full strategy, plus you'd like to be one of my personal students where I can mentor you and you can contact me anytime you'd like, this is a great deal for $37. Here's how to take advantage of that. Once again, just contact Pro Trader Strategies. That is their email address right there and their phone number. But the link that will take you directly to that is posted on the very bottom, as you see there. Now, that is not a live link, so you'd have to copy and paste that onto your browser. If you would like to get a live link, if you look over on your chat box on the far right of your GoToWebinar column, as you can see, they've posted a live link in the chat box. All you have to do is simply click that on, and it will automatically take you to the $37 sign-up page, okay? Now, $37, once again, I can almost guarantee that most of you spent more than $37 trading today, just with commission costs alone, all right? And you can't even go out to dinner for less than $50 or to $100 these days. So for $37, this is yours. You can keep. It's yours for life. It's not something that only lasts for a couple of weeks and then disintegrates. It's an online course. We send you the link to the video so you can watch it on your computer whenever you like. It's not something you have to wait to be shipped or mailed to you. It's going to be yours in a matter of moments today. And you can be my student as well. You can be emailing me and conversing with me as soon as today if you'd like. So I'm going to leave this information up, and then I'll open up the question and answer box. And I want to thank you all for taking time out and not asking any questions, and I'll answer anything you might have had right now. Joseph asks, I missed the beginning. Can I get the recording? Yes, Joseph, all of our presentations are recorded. Simply contact Pro Trader Strategies. You can email them right there as you see in front of you, and they'll send you a link, okay? Let's see, what type of orders were canceled? Limit, stop buy, stop sell, etc. I don't think those were market orders. No, see, because a market order wouldn't create a resistance. There were limit orders, and that's what creates resistance when there is a limit order. Because usually when we would get these institutions, people would, let's say I was trading waste management, let's say the stock was at 50, okay? Now, the stock would be trading orderly, there wouldn't be a ton of buyers, there wouldn't be a ton of sellers, and all of a sudden, one of the brokers, let's say Bear Stearns, would come up to me and say, I have a client, an institution that has upwards of 1 million shares to buy. They want to start out with 250,000, and they'll start buying it at 50. So let's put a limit order to buy 250,000 at 50. Okay? So I have that order in my book. Now I know that that's going to hold the price up there for a while. All right? Unless there's a larger seller than 250,000. And plus, these people know that they have upwards of 1 million to buy, and they're only showing a little bit of their hand at first. So if they bought some at, say they bought a bunch at 250,000 and the support didn't hold, well, then they're going to lower their bid for the next 250,000, let's say down to 49. All right, so then that's going to create the next support. And let's say they buy that really simply and very quickly. Then they say, well, let's go down to 47. We'll buy the next 250,000 there. So that's the way it works. So either they're going to cancel their limit order, or they're going to get hit, meaning that someone's going to sell to them. Now that may take a while. It doesn't mean that 250,000 will disappear in maybe a day. It may take a couple of weeks. But that's what the only thing is that creates support. It just means at a certain point in time, there are more buyers than sellers at a certain price level. Don't try to overcomplicate it. It has nothing to do with Fibonacci levels. It has nothing to do with conventional ways of looking at support and resistance or institutions. It just means that there's a buyer. Resistance just means there's a seller, and they can leave anytime they want. So why it is really silly to base your trades off of that order. It's really silly because once they leave, why would you think that there's support or resistance there anymore? Okay, so it's much better to we're going to exploit that. And once they leave or once that order has been filled, we're just going to go the opposite direction because we know that there's nothing there anymore. Okay. It's Huge is asking, what's your experience with applying the strategy with micro penny stocks? Well, first of all, Hugh, this is not a strategy. Remember, I said that just a few minutes ago. A strategy would entail that we have an exit point. A strategy would entail that we have stop placement. A strategy would entail that we have money management. This is just an approach to trading. You can apply any technique you'd like. You can apply where you want to enter. You can apply where you want to place your stop. The only thing I can tell you is that it is just based off, it's all relative, in other words. So there's no difference with penny stocks as it would be with looking at Apple or Google. The only difference would be the price of the stock, okay? Because there's no difference. Those are based off orders as well. But they're a different animal. You know, you may have more slippage because of low volume in a penny stock. You may have smaller moves, smaller movements, as opposed to maybe getting 20 or 30 points. You may get less than 2 or 3 cents. You know, you don't know, but it's all relative. So try it out. You can do your research and paper trade for a while, but it's all just everything is based on orders. So if there's no order there, if there's no buyer, no seller, it's going to go through, regardless if it's a penny stock, regardless if it's a future, regardless if it's currency pairs. Absolutely makes no difference, okay? Remember, I've stated this, and I can't say it enough. Trading is simple. It really is simple. It's only us that overcomplicate it. Once you start letting go of all these preconceived ideas that for some reason we've been taught are supposed to be beneficial, but they're really not. Once you let go of them and really just hold on to the things that have stood the test of time, that's when you'll become a consistent trader. And by consistent, I don't mean that, hey, I made money this month, or hey, I've been trading for a couple of weeks now and everything's working. Consistent means trading 10, 20, 30, 40 years down the road. That's really the true meaning of success. Not how much money you can make, because I knew tons of traders on the floor that made hundreds of thousands of dollars, if not millions of dollars, in a relatively short time. And guess what? They gave it all back. In fact, none of them are even trading today. So the point is, what good was it if you couldn't hold on to it? There was no level of consistency. So it's all about longevity. And I'm trying to teach my students, and you included in these webinars, these free webinars, things that have stood the test of time. So hopefully they can eventually turn your trading around, and you can see that trading is really simpler than it has to be. Okay? Jim asked, no need to use any complicated option strategies with this technique, just buy calls and puts? Sure. I mean, personally, Jim, I don't trade options. But sure, the option traders that we do have in our courses, they simply take the techniques and they just transfer option buying, of long calls or long puts. Very simple, directional calls, directional puts. That's all they'll do. But once again, I always recommend, even to the people that purchase our expensive courses, we have courses that run anywhere from $400, $500 up to $5,000. But everyone gets the same rules, but we always say the same thing in suggesting that don't jump in feet first. In other words, don't start trading with real capital. Always paper trade first. I still paper trade. Every once in a while, I will get an idea from the things I've been taught, and I'll see a different variation. I don't just jump in and start using my real money. I will paper trade, sometimes even 6 months. So paper trade, see if it works for you, and then go ahead and use it. But we've just given you this information for free. You can start applying it, paper trade, as early as tomorrow if you like. Now remember, we're offering you tons more information because of our good faith and that we want to do business with you and be your personal mentor in the future. We're offering you tons of information for only $37. I can't think of a better deal to get this information as well as a full-fledged strategy for such an inexpensive price. But remember, that's not going to last forever, just a few days. So if you haven't taken advantage of it by now, you really should. Just contact Pro Trader Strategies. The link at the very bottom of this page is the link to go to, but that's not live. You're going to have to copy and paste that onto a browser. But if you look in the chat box in the far right, there is a live link there posted, and you just have to click that on, and it will automatically take you to the sign up page, and you can be up and running in just a few moments. Okay? Now, as we close here, I just want to say these are all techniques that I currently use in my own trading. These are things that I've accumulated as well. And I want to just tell you that each and every year, everyone starts out saying the same thing. Everyone says, well, this year is going to be different. I'm going to get on that road to being successful. I've had the last couple of years have been terrible, but this is the year everything turns around. And everyone says that, and most likely no one ever reaches those goals by the end of the year. It just very rarely happens. If you really are serious about turning your trading around, it's still the beginning of the year. It's not too late. Jump on board with Specialist Trading. Remember, we're different from other companies in that we just want to educate you. We're not trying to, have you focus on buying our techniques and tips and strategies so that you're glued to us, that you can't leave and you have to come to a trading room or chat room. We don't believe in that way of teaching. We ultimately want to teach you so that you can leave, so that you don't have to rely on us. It's not our goal to have you rely on us for information. We want you to make your own trading decisions, because in my 40 years of trading, that's the only way one becomes consistent, by making their own trading decisions. So what we do is simply provide you with the information to make your trading decision. So if you're interested in really turning around your trading and making 2016 the best year ever, jump on board today. Take advantage of that extremely low $37 deal. And I look forward to all of you becoming students and members of mine at Specialist Trading. Okay? Thank you so much for attending today. I'll see you next time. Bye-bye.